If you're a Canadian senior receiving CPP, OAS, or GIS, or you're getting close to that age, there are changes happening right now in 2026 that could directly affect how much money lands in your account every single month, and a lot of seniors simply don't know about them yet. Hey everyone, welcome to Frank Canada Today. I'm Frank, and this channel exists for one reason: to help Canadian seniors and their families actually understand what's happening with their government benefits, without wading through confusing government websites or getting lost in financial jargon. Every update, I break down exactly what's changed, what it means in real dollars, and what you actually need to do about it. And today we're covering a big one, because CPP, OAS, and GIS have all had updates rolling out through 2026, and if you're not aware of them, you could be leaving money on the table, or worse, risking a payment suspension without even realizing why. I'm going to walk you through the new CPP increase, the updated OAS amounts and the clawback threshold, how GIS eligibility actually works this year, and a brand new benefit that's launching this summer that many seniors qualify for automatically. Stick around for all of it, because some of these details genuinely change what strategy makes sense for your situation. Let's start with CPP, the Canada Pension Plan. Every January, CPP payments are adjusted for inflation, and for 2026, that increase came in at 2.0%. Now, I know that number might feel small compared to some of the bigger increases we saw during the high inflation years, but this is a much cooler, calmer economy right now. And while a 2.0% bump might not feel like it fully covers rising grocery costs, it's still guaranteed protection. Unlike some private investments, your CPP simply cannot go backwards. There's also something bigger happening under the hood with CPP this year. The CPP enhancement is now fully in play, which is a long-term shift designed to eventually boost the pension from replacing 25% of your working income up to 33%. This won't change what current retirees are getting overnight, but if you're still working and contributing, this enhancement is quietly building toward a bigger pension for you down the road. Now, let's talk about OAS, Old Age Security, because this one works differently. Unlike CPP, which adjusts once a year, OAS, along with GIS, the allowance, and the allowance for the survivor, are all reviewed every single quarter. As of the second quarter of 2026, the maximum OAS payment sits at $751.97 a month if you're between 65 and 74, and $827.17 a month if you're 75 or older. That age-based bump at 75 is worth remembering if you're approaching that milestone, because your payment automatically increases once you hit it. Immigration News Canada. Here's something higher-income seniors especially need to pay attention to, and that's the OAS recovery tax, which most people just call the clawback. This is a 15% recovery tax that kicks in once your income crosses a certain threshold, and for 2026, based on your 2025 income, that threshold is $95,323. If your total income is above that line, a portion of your OAS starts getting clawed back through your tax return. If you're close to that threshold, it's worth talking to an advisor about how withdrawals from RRSPs or RIFs might be pushing you over that line, because there are strategies to manage the timing of that income. Blueprint Financial. Now, let's move to GIS, the Guaranteed Income Supplement, because this is the one that trips up the most people, since it's entirely income tested. GIS tops up low-income seniors who are already receiving OAS, and it can be worth up to $1,123.17 a month for a single senior. To qualify as a single, widowed, or divorced senior, your annual income generally needs to be below $22,488, and if you're part of a couple where both of you receive full OAS, your combined income needs to be below $29,712. The key thing to understand here is that GIS isn't a fixed amount. It phases out gradually as your other income rises, so even a modest RIF withdrawal or part-time income can reduce what you receive. Withdrawals from registered accounts like RRSPs and RIFs count as income and reduce your GIS roughly 50 cents for every dollar, which is why many financial planners recommend keeping savings in a TFSA wherever possible if you're relying on GIS, since TFSA withdrawals don't count against you at all. There's also a related benefit worth mentioning if you have a spouse or partner between 60 and 64. The OAS allowance is available if you're between 60 and 64 and your spouse or partner already receives OAS and qualifies for GIS, provided you're a Canadian citizen or legal resident who has lived in Canada for at least 10 years since turning 18, and your combined household income is below $41,616. And if you've lost a spouse, the allowance for the survivor can pay up to $1,680.47 a month in 2026, though it stops the month after you turn 65, since at that point you transition to your own OAS and GIS. Now, here's something absolutely critical that too many seniors overlook, and it's not about how much you get, it's about keeping what you're already getting. Filing your tax return on time, on or before April 30, is critical because late filing can actually trigger GIS payment suspensions starting in July. I cannot stress this enough. Even if you think you owe nothing or your income is low enough that you assume it doesn't matter, Service Canada uses your tax return to verify your GIS eligibility every year, and if that return isn't filed, your payments can simply stop. If you or a family member has fallen behind on filing, get that sorted as soon as possible because it directly protects your monthly income. Immigration News Canada. Finally, there's a brand new benefit launching this year that a lot of seniors will qualify for without even applying. Canada Groceries and Essentials Benefit is a new quarterly tax-free payment that's replacing the GST and HST credit starting in July 2026, designed to help Canadians, especially low-income seniors, manage the rising cost of food and everyday essentials. Payments are automatic as long as you filed your taxes, and most seniors already receiving OAS or GIS will qualify for the maximum amount. This is another reason that tax filing point matters so much, because this new benefit, just like GIS, flows directly from your tax return being on file. So let's bring this all together. If you're on CPP, expect that steady 2.0% bump from January, plus the longer-term enhancement building in the background. If you're on OAS, know your current amount based on your age bracket, and if you're a higher earner, keep an eye on that $95,323 threshold. If you're relying on GIS, understand that it's income tested and can shift with even small changes to your other income, so protecting that eligibility matters. And no matter what you're receiving, file your taxes on time because it protects both your GIS and unlocks this new grocery and essentials benefit automatically. That's your full CPP, OAS, and GIS update for 2026. If this helped clear things up, hit subscribe, because Frank Canada Today covers these updates as soon as Service Canada and the CRA release them, so you're never caught off guard. Drop a comment and let me know which of these benefits applies to you, and I'll do my best to point you in the right direction. And if you know a senior in your life, a parent, a grandparent, a neighbor, who could use this information, please share this video with them, because for a lot of people, understanding these rules is the difference between getting every dollar they're entitled to and quietly missing out. Thanks for watching. I'm Frank, and I'll see you in the next episode.